Quiet one, please. Talking. So what do you need? We'll give you now. They know. If it's sure for them, let them come. No, please let us give it. Hold on. Let's finish one. Quiet one, please. So what do you need? We'll give you now. They know. If it's sure for them, let them come. No, please let us give it. Finish one. Okay, aloha there, traders. Welcome to this beautiful Friday. Great to have you here today. It's been an amazing trading week with some decent profits. Okay, if you've been on our Telegram channel, I'm sure you'll be reaping and smiling fat right about now. It's great to have you here Friday as we end the trading week. Of course, if it's cryptocurrency, then perhaps we might trade that into the weekend. You know, as always, I am Atomashi Dania, Vestrado's global market analyst. I'm here for you today. Today, we're studying a very, very peculiar topic, stop loss. As I said before in earlier lectures, I said that the issue of setting stop loss um, might be covered in one, two, or three parts because stop loss is quite important, and there are different strategies in application of this. So we might look at perhaps even more. Okay. But before I go on, I'd like to make you understand that we are Vestrado. We are Vestrado. We are domiciled with offices and representations all over the world. We are domiciled with offices and representations all over the world. Malaysia, Dubai, China, Hong Kong, um, Indonesia, Singapore, Nigeria, South Africa, Kenya. Welcome, ladies and gentlemen. Welcome, welcome, welcome. Okay, so what are we going to be doing today? We're going to be looking at setting stop loss using price rejection. But before we do that, we're going to look at um, price rejection. Okay, break down price rejection. What is price rejection? How does it apply to the market? And then we're going to be setting our stop loss using price rejection, how to go about that. And finally, we'll join. We have live sessions ongoing on Facebook. Okay, Thursdays usually. So Fridays, we have it here on YouTube. Be sure to join. You can learn something. Ask your questions, whatever it is, if it's pertaining to today's class, or perhaps maybe a topic that has plagued your mind and you need clarification, go ahead and ask. I'll be here for you. All right, let's wait a bit for those who want to join up. Let's wait a bit. Then we start. We're not going to be wasting so much time. We're waiting a bit. Some people are requesting the link here. Let's just send across. Okay, in the meantime, um, it's important to let you know that we have our Vestrado Telegram channel where we give outlook, advice, give entry levels, signals, or perhaps intertime, as I said. Now let's get into the action. First off, let's look at what we did on Telegram. Let's take a sneak peek at some of our activities on Telegram. So, starting Monday, the 16th, we started out with a weekly summary of the previous week, how the week played out. Then we went on to give weekly outlooks on the NZD USD, the AUD USD, the USD JPY, Bitcoin, and Ethereum. Okay. And on Tuesday, we talked about intraday scalping opportunities on gold, how to take advantage of the opportunities from gold on that Tuesday. Interpreted the back of Japan's policy rate and monetary policy statement, the US retail sales data, interpretation and how to trade perhaps, the USD JP CHF, daily outlook and entry level alert. Okay, same Tuesday. And then we saw our take profit captured on gold. Another take profit, second take profit captured on gold. Okay. Next, we talked about news events to be had within the day and how to trade them, interpretations, how to trade them. We had that. Then we have the USD JPY brief outlook. Brief outlook. USD CHF take profits from the previous day, two take profits. USD JPY, two take profits from the previous day, too. And then GBP USD general outlook. We had that. We have the GBP USD intraday scalping opportunity. Okay. And then an educational tip, trading tip in the art of waiting. Waiting in trading, ladies and gentlemen. Trading, waiting is also trading. And then the interpretation of the US federal funds rate, big deal. The FOMC decided to keep rates steady. Okay, this was Wednesday. Now, Thursday, also major events to be expected from the calendar, economic calendar. That was the UK monetary policy statement. We had Australia's jobs data interpretation. We did a lot. The Swiss National Bank policy rate interpretation, daily outlook on the USD CHF, take profits a lot from GBP USD, general outlook given the previous day, and on Thursday, AUD USD daily outlook. We had that also on Thursday. Today, of course, take profit alerts, triple take profit alerts from the AUD USD given outlook given yesterday, and double take profits from the USD CHF outlook given also yesterday. We had a daily outlook on the USD CHF. We had general outlook on Euro JPY. And for the Euro JPY, all our take profits were captured, but I haven't posted that yet. So you see, we've been up to a lot on Telegram. You better come join us. We're doing a lot every day. You just can't miss it. You'll be glad you joined because you'll be privy to lots of entry levels, signals, advice, and other conversations about the market. Ladies and gentlemen, okay, let's get on to the action. Let's get on to the action. Oh, technical difficulties a bit. There you go. There you go. All right. Beautiful, beautiful, beautiful. Now, first up, let's start with price rejection. Let's have our topic set in there. Let's have our topic set in there. Now, setting stop loss using price rejection. Okay. Now, the first question. Today, we're not going to give any major facts like we normally start with. What is price rejection? Okay. It's simply put, it's an abrupt or sudden change or reaction, okay, of price to a particular level, okay, it's often signified by an immediate reversal. By an immediate reversal, okay, um, characterized by long wicks, characterized by long candle wicks. Yeah, this is a typical definition of price rejection, but price rejection can come in different ways. So let's see how we can locate price rejection on the charts. Okay, let's see how we can locate price rejection on the charts. So price rejection can be located or can form via the following ways. One, single candle patterns. Single candle patterns such as the hammer, or let's say the inverted hammer. What the trading world likes to call the shooting star. Two candle patterns, okay, such as the railway track, the railway track, and then maybe also the engulfing pattern, abrupt change in the direction of price, right? And finally, three candle patterns. Okay, most likely for me, the most common way to spot price ejection that I like to use is or are the morning star and the evening star, right? So let's look at each one after the other. First, we look at the single candle pattern, right? I talked about this topic briefly on Facebook using the in the under the topic yesterday called the most convincing signs of price reversal. If you're interested in that, you can go there and check. Now, imagine price is headed up, right? Gets to a particular level and then wham! Let's take that again. Which is a particular level, when a kid, a toddler, 1 year old is trying to test the hotness of fire. I said that yesterday. What does he do? You see, when he touches fire, he removes his finger immediately. So, as does any other normal individual. Fire burns. It's like a taboo. Okay? When you're feeling so much pain, what do? You avoid it. It's like an avoidance, like a taboo, sort of, on the chart. Now, on the line chart, this is what it often appears as. So you see a sharp drop. All right? By single candle patterns, you can get something like this. Okay? Very long wick. Very long wick. Okay? Very long wick. That's for single candle pattern. And what's the example I gave there? The inverted hammer or the shooting star. That's exactly what you have right there. This one, this guy. Now, The second example I want to give you is this. Okay. Candle patterns that are known to easily signify, that often form, especially when price rejection happens. Now, two candle patterns, right? So you have price go up and up and up and up and up and up. Again, sharp drop. So you get something like this, up and up and up. Okay. Say you get nice long candle up or bar, and then you have a sharp drop, about candle of about the same length. Bull, you have a bull, and then you have a what? A bear of about the same length. Railway track. So not just any railway track, not just any railway track, but a very long railway track. A very long railway track. Okay? So let's go back to the hammer. Now, price ejections often signify reversals, right? Or they are often, how do I put it? Indicates massive volumes in the opposite direction. So let's try to put that into perspective here. Price ejections often signify large volumes in the opposite direction of price. That is, at one point, at this moment, there could be a lot of buyers, and then um, and immediately an abrupt change occurs, leading to a larger number of sellers, or vice versa. Vice versa meaning we could be have a lot of sellers at this moment, and then eventually an abrupt change leading to a large amount of buyers, okay, that outweigh the number of sellers. The change is often quick. So what usually happens is reversal tends to happen. Reversals tend to happen. So what you do is a typical price rejection trader will do what? Will place his sell position right around here. Let's try to put that into perspective. So at this point, okay, sell. But guess what? Um, there's a final feature of price rejection that most traders do not pay attention to. Okay, but before then, let's look at the three candle patterns. Look, up and up and up and up and up. And then maybe you see a bull corresponding to the uptrend. And then you see a very long candle. Could be a hammer, could maybe not be a hammer. And then finally, the third candle right here that closes below the range of the second and the first. These three candles are called, this is the evening star. Okay, this is the evening star. right? Evening star. You have a morning star too. So it's the same thing. In a downtrend, perhaps you have this. You have this. A beer, and then a candle with a long wick. Could be a hammer, could maybe not be a hammer, be a normal candle, but a long wick, and then a completion with the third candle here being above the close of this guy and this guy. These three are called the morning star. We haven't done three candle patterns on this channel yet. We're going to cover that perhaps in 2 weeks' time. And this guy right here is called. This is not a typical morning or evening star. It's a morning and evening star with long wick of the middle candle. So pay attention to that. So you have this, the morning star, right? Great. So let's add a final point here. Let's add a final point. Now, it could also be a normal candle, but one with a relatively longer wick compared to the length of the body. So you see these four ways price rejection can be identified on the chart. Now, the yardstick to use. For example, I like to see a body that at least 10 to 15 times the length of a wick that's at least 10 to 15 times the length of the body, right? Some traders want to see a wick that's 20 times the length of the body. Your choice. Okay, the longer the wick, the higher the probability of a reversal. Let's put that right there. Let's put that right there. The longer the wick of a price rejection candle, the higher the probability of a reversal. Right? Okay. So this is it. This is it. I'm going to embolden that because it's quite important, yeah? Put that in red for you. The longer the wick of a price rejection candle, the higher the probability of a reversal. Ladies and gentlemen, now there's another feature about price rejection that most people, many traders, including veteran traders, um, forget. Now, for every price rejection that occurs, always wait for the confirmation candle after it. What do I mean by the confirmation candle? What's the confirmation candle? Look, this guy for the three candle pattern, okay, is easier after the the long wick, okay. This in this case can be a confirmation candle, which in this case you want to read up three candle patterns, wait for our lecture maybe next week or in 2 weeks time, and I can tell you more about three candle patterns, how to trade them. But if you're my student right now, you're here on this training, you already know what I mean. So it's easy to get a confirmation candle for a three candle pattern. This guy right here, confirmation of the reversal. So you have the trend, downtrend, the price rejection, transition candle, and then the confirmation candle or the future candle. Okay, in this case, this guy is the confirmation candle. This guy is the confirmation candle, right? And then for the railway track, the confirmation candle will be thus. Okay, the break downwards. The break downwards. Now there are two types of railway tracks: consolidative and um, immediate reversal railway tracks. Some railway tracks lag, even meaning that before they start an immediate reversal, sometimes they could go back to retest halfway the length of the railway track before eventually what? Headed back down. Okay? So wait for a confirmation. A clear break, significant break below this level with volumes. So this is the confirmation candle, right? Confirmation candle. Now, for the one candle pattern, the confirmation candle will be the candle that forms after it. For example, in this uptrend, price rejection down, pointing downwards, you see that price touched this level, right? Initially, price was doing what? Price was going up and then touched this level and dropped right around here, right? Same thing, right? So the confirmation in this case will be perhaps a bearish candle that forms after the one candle pattern here, the single candle pattern. So the bearish candle there will signify that the reversal, okay, is strong. For those who don't know, on this paint board, bullish candles are white or transparent, bearish candles are black or shaded. So this is our confirmation candle here. Wait for that. Wait for that. There you go. So that's that about price rejection, ladies and gentlemen. The longer the week of the rejection, the higher the probability of a reversal. So where do we set the stop loss? Where do we set the stop loss? Now, look, as opposed to normal reversal, let's look at uptrend, 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 overbought level. Say we reach overbought, okay? For example, and then maybe a small hammer forms right there. No, this is not for me. Some old traders, perhaps veteran traders or intermediate level traders, might set their stop loss right around here. Might set their stop loss right around, maybe a few pips above this stop loss, right? This will be wrong, ladies and gentlemen. This will be wrong because there's no price ejection here. Instead, this is what I want to see. Wham! A long candle. Okay. Then if I see price ejection like this, I feel safer. I feel more at ease when I set my stop loss just a few pips above the price rejection. Why? Because there's a high probability for it to reverse. If price is able to go back, okay, if price is able to head back to this particular high, for example, then the probability that it will reverse is markedly reduced. But the probability that price heads back up is usually quite low when you have a very long price rejection. So because of this, because of the fact that if price is strong enough to equate the drop and go back up again, then it means that the bearish volume, the bearish strength is not strong enough to carry price all the way. Hence, my stop loss is valid. So it solves the problem of setting stop loss too early or too late. In the case of price rejection, there's nothing like setting stop loss too early or too close to the reversal candle. Because the presence of price rejection there itself is already clear indication that the reversal is strong. The reversal direction is quite strong. But if in the case where it's not, and price starts to go back up, then it means that there's no clear direction in price, and you don't want to be in that market. You don't want to be in that market. So set your stop loss right there. You need a clear direction. You need a clear direction, and this will be the correct thing to do. Okay? This will be the correct thing to do. Many people see this in literature context, many books and materials, but they don't know how to differentiate. They see that much of this literature content is usually quite wrong. But in many cases, it's not. Because those literature content involve price rejection, only that the materials you find in some of this content online, it's not usually indicated there that better to spot reversal candles when you have price rejection. And by the way, if you want to know the most convincing signs of price reversal, go to Facebook and you find, excuse me, the topic, the most convincing signs of price reversal. And the way to find out Facebook is facebook.com/Vestrado, or you can type Vestrado in the search box and you can easily get that, okay, on Facebook. So this would be the right thing to do, ladies and gentlemen. This would be the right thing to do. In a downtrend, for example, we're rounding up. We're going to go to the chart right now. Downtrend, price rejection, okay, and finally what? Stop loss. Stop loss. Okay, ladies and gentlemen, that's that for stop loss with price rejections. Now let's go into the charts. Let's go into the charts. Let's look for a place where we had strong price rejection. Look at Ripple, XRP USD. Okay. Look at this clear price rejection right here. Long wick. Assume we entered right here. You see the confirmation candle. This guy looks like a railway track. No, you're not. Just a normal candle. Okay. And here, I will place my stop loss because of that price rejection, 2.056. You can see that very clearly. Okay. So, ladies and gentlemen, I hope this was educative enough. It was great to have you. I hope to see you again next week. But before we go, let's see if we can have um, some advice on Bitcoin. What is Bitcoin looking like? Bitcoin seems to have captured our take profit levels, but it's formed reversal patterns. A break below 102995 could see price touch 102575. Break below that could see price touch 102082. And below that, perhaps 100783. Below that, 98960. But if price is strong enough to head above in the long term, 105427, then we could see touch upon higher levels right here. 106382. Above that, 107078. And above that, perhaps 108317. Ladies and gentlemen, Bitcoin, Ethereum. We talked about the fair value gap on Facebook. We said generally it looks like it's trying to recover the fair value gap. So if price breaks below 2447.2, it's doing that right now. If I were you, I would sell. There's a good chance it's going to go below that too. 2411, which is breaking below that already here. If it goes below that 2360.0, below that 2287.9, and below that 2212.0. But if it's strong enough to head above 2544.5, then there's a good chance price could touch 2637.0. Above that, perhaps maybe being conservative, 2694.7. Okay. I'm bearish on Ethereum. Ladies and gentlemen, I am bearish on Ethereum. I'm selling. So this is that for trade opportunities over the weekend for crypto traders. It was great to have you. Okay. I hope you learned something today. As always, I'm Atomashi Dania, Vestrado's global market analyst. Okay. Before we round up, let's look at USD CHF. Look, this guy broke below the channel right here. If it breaks further below 0815.6, we expected to touch 0.8145, and below that maybe 0.8133. Okay. I'm briefly bearish on the USD Swiss. If it heads to higher levels above 0.8180, it could touch upon 0.8190, and above that perhaps 0.8200 psychological level. But I doubt that. It's formed a nice heads and shoulders pattern. Let's see if we can spot that right here. Yeah. So we see a nice heads and shoulders pattern there. The shoulder into next week. Pay attention to that. Okay. And then nice heads and shoulders pattern where this guy is the neck. Pay attention to that on the USD Swiss. I'm perhaps going to talk about that on our weekly outlook on Telegram. Be sure to join. It was great to have you today. Again, I'll see you again next week, Friday or Thursday on Facebook. Try to join us. This is Vestrado. I'm Atomashi Dania, Vestrado's global market analyst. As I leave you this evening, I leave you with these few words. The trend is your friend. Don't be greedy. Don't be overconfident. No one strategy is king. There are millions of traders in the world, as there are thousands of strategies. No one strategy is king. No strategy is better than the other. One man's food is another man's poison. Remember, the trend is your friend, and trade within the trend. Have a good one. Bye bye.